I think the more pertinent bear case for ETH proof of stake is that it ends up being this kind of like coagulation of open interest and speculation that does not lead to any further adoption of ETH in its proof of stake form from, say, your institutional folks. So like one of the main narratives, is that with the new ETH staking rate, and because of EIP 1559, where it will largely move ETH to either a net zero or a net negative issuance rate. ETH's current inflation rate because of miners is somewhere around 4%. Post merge, at the current activity levels, it'll be like 0.5%. So the thought is, if the staking rate's 7% and you start to get a whole bunch of money flowing into the system and the ETH price goes up, maybe it gives people more incentive to kind of come in and gamble a little bit more, which flywheels the price of ETH up further, because the net issuance of ETH is now negative, right? So you kind of run into this like deflationary spiral of sorts. So the bear case for me is that you don't really see any large money come in. You don't see any new retail money come back in or come in. You don't see any sort of like unique proof of stake narrative, and all of the open interest that has built up and all of this speculation that has built up just collapses on itself, and we kind of go back down towards 1K ETH.
Is what you're getting at.
False flag, 100%. Maybe there are some small issues there, but largely just like a non-event. I think that's your biggest bear case.
Okay. Go ahead.
I was going to say the bull case is some of what I mentioned there, where basically from a macro standpoint, you have things cooling off. We saw yesterday, early morning, that China has decided to start printing money in a variety of different ways again, right? And I think the sentiment has started to shift from a macro standpoint a little bit more towards the Fed being forced to slow down their rate hikes. So I think, max bullish case for ETH going into merge is that the CPI on September, I think 10th or 12th it is, comes out and it's lower than expected and it's lower than last month, which, we saw in June or July was like 9.1. The most recent CPI was 8.5. So let's say we get like 7.9% in September. What that's going to do is that's going to signal to the broader macro markets that inflation has indeed peaked, and the Fed, the broader market is basically going to look to the Fed to say, hey, you don't need to continue to raise at 75 basis points, right? So maybe the Fed raises at 50 basis points. And all of the money that's sitting on the sidelines, all of the money that has fled risk markets because of recession fears and Ukraine war and the collapse of the European Union and blah, 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 all of that is going to flood in. And it will flood in at a time when ETH has a brand new narrative that delivers stakeholders a staking rate that is somewhat competitive to the rate of inflation, right? I think the estimate currently is about 7% on staking your ETH. So what you're going to get is you're going to get these major institutional players who are going to come in and they're going to create a variety of different structured products that will take that 7% rate and try to do unique things to increase it to say like 9 or 10 or 11%. And they'll go and they'll sell that structured product to hedge funds and mom and pops and all this, right? And then the net result of that structured product is going to be some form of spot buying and futures shorting, right? Which is what you see currently in the ETH market. It's what we saw with the Bitcoin run up, where there was so much demand for Bitcoin, and the basis, which is the price of spot versus the price of futures, was so high, got as high as like 30%, that people would come in and continue to run the same play. You buy spot, you sell futures, and eventually that price would converge. So it's, all to say that if the macro setup is actually turning, and we have seen the worst of inflation and we've seen the worst of the macro setup, then ETH will be hitting that Fed pivot and that macro pivot with the strongest narrative it's ever had at a time when Bitcoin is kind of still struggling with its own inflation hedge narrative. And at a time when trillions and trillions of dollars are going to be coming back into risk markets, hopefully creating this kind of deflationary spiral on ETH.
Yo, it's Nifty Q. I hope you enjoyed that short clip from my interview. Each week, I'm sitting down with some of the best founders in the industry to help you on your journey in NFTs and Web3. All the links to the podcast are in the description. Hope to see you there.